Good afternoon. This is Craig Modelmog for this week's episode of Wall Street X's and O's. Today is Friday, October. Geez, it has been a long week, let me tell you. Friday, August 13th. As many of you know, this last week I was moving my daughter into her new place with her girlfriends, moving some furniture to my son. We drove back Tuesday. And I've been wiped this week. I'm a little fatigued, but you know what? It's good. I'm a gamer, and I definitely wanted to kick this out today because I do have some good stuff. So for those of you joining us for the first time, this is uncut and unedited, and I would say you will realize that very soon that is the truth. But I'm glad for those of you who are returning that you joined us. And like I said, I hope the information today is really good and helpful. So to kick this off, we got the standard disclaimer. Content that is presented on this show is for informational purposes only. None of the information constitutes or an offer to sell or buy anything. It's not a solicitation of an offer to buy or sell any investment security. Investments can and will lose money. They are not FDIC insured, and this information is presented without regard of individual investment preferences or risk parameters in general. See, I'm struggling already getting through the disclosure. I just got to breathe. It's all good. Let's get cranking here. I've got a good show today. We're going to hit on natural disaster planning, or what I'm going to say, everyday planning. We're going to talk about cost of living adjustments in Social Security, the COLA that's being projected now while they don't name what that amount is or what the level is, which comes out in October. We're going to talk about that. And I'm going to have some market stats really quick here. But first of all, financial safety often is forgotten when they talk about preparing for natural disasters. Okay, I'm going to say just preparing for life, in everyday life. You know what? Life can change on a dime, whether that's an untimely death, an illness, being fired from a job, somebody breaking into your house, breaking into your office, your car, whatever. Bad things happen. And the sad thing is they usually come when we're not anticipating them. What we need to be cognizant of is preparing. You hear that prepare for the worst, hope for the best. Well, this is one of those prepare for the worst speeches. And there's some things that we need to be cognizant of or thoughtful of as we all move forward. These are just kind of some things that kind of hit me pretty hard, obviously, with experiencing our COVID experience here this 6 months ago. And it makes you think, makes you stop, makes you reevaluate and inspect what I inspect. It makes us look at what are we doing and why, and are we doing as well as we should be. So first of all, creating electronic documents. Now, here's what's cool. This goes for any type of important document. It could be bank statements, tax documents, legal documents, business formation documents, contracts, etc. What we need to get in the habit of doing is making sure we have an electronic copy of these, whether they can be stored in the cloud. I know I use OneDrive, which is through Microsoft. There's Box, Dropbox, there's a bunch of them out there. That is something to consider. Some people will save them or burn them to a disk. That's kind of old-fashioned because most computers today, at least laptops, don't even come with a CD burner. The other one would be using a USB flash drive. Why this is important is that even though we try to keep documents safe and secure in hard copy, there are instances when those hard copies are destroyed or something happens to them. So the electronic copies is a big one to be focusing on. You can request from your CPA, you can request from your attorney to them to provide you with electronic copies. Most of the time they already have them and they're not going to charge you extra money if they do say, no, this is just should be something you should have provided already. And have them do that because it's just something nice to have. You can keep them, you can give them to your kids, your family members, those that are involved in your life, okay? The next one is documenting valuables. These are things where sometimes not just documenting them on paper or on a spreadsheet is enough. Take pictures of them, take videos of them. These are things that are easy to do with our smartphones today, and it's really something we need to think about and is a really simple activity to do. So when you're killing some time or when you think about it, your valuables, go and take pictures of it and then store it again in the cloud, in your Google Pictures, etc. Okay, just some little housekeeping things. Moving on here, we're going to talk about the cost of living adjustment, of which, for those of you who are receiving Social Security, those who we all hope to receive it someday, it is basically every year the amount that you receive is adjusted based on inflation. They call it a cost of living adjustment, or a COLA. This year, of which they don't name the official COLA until October, because it is based on the third quarter inflationary numbers. Should they have named that based on what they reported recently? Okay, which this isn't legit, but just to give you an idea, it would have come in at 6.2%, which is the highest since 1983, which again, for those of you old enough to remember back in the late 70s and 80s, super high inflation, super high interest rates. So that's kind of an impressive number to say we haven't had this high of an inflationary COLA adjustment to Social Security since the 80s. That's a big deal, okay? Now, while we have to wait to see what third quarter looks like, okay, and it's the average of the third quarter. So that is July, August, and September. See, I had to think about it in my brain. For whatever reason, I couldn't remember those third quarter deals. So July, August, September, that is the third quarter months. It will take an average of those 3 months from a standpoint of CPI, and that's what will dictate the COLA for the next year. So that's going to be kind of fun to watch, okay? Some interesting stats here. This is good stuff. PPI, which is Producer Price Index, which kind of measures productivity and kind of how things are going, came out at a transitory 7.8%, which is one of the hottest numbers we've seen in a very long time. And when I say transitory, I'm being unbelievably sarcastic. For those of you who have joined me on past shows, I talk about how the narrative that the Fed and the government is spinning to us, where this is more transitory or temporary when it comes to inflation, that there's no way that's happening. Because here's what's ironic. The inflationary numbers that we see today, of that, 1/3 of it is made up of shelter. What is shelter? Rent costs and housing costs. Now, I'm sure anybody who's listening to this could answer me on, is housing and rent accelerating at levels like we haven't seen in a very long time? The answer is yes. So it is also a lagging indicator as things report, which are actually a lagging impactor to CPI. So what that means is we're already at an elevated rate, and a lot of the changes in shelter aren't even included in that yet. So again, my anticipation is inflation is going to stay elevated and sticky. I love that. It's kind of sticky. You know, that's going to be a big thing. Jobless claims came in for the week of August 7th, posted a new pandemic low. That's good, 375,000. That's kind of what we expected. You know, we've got government benefits that are being dropped at the state level, and more of these things, these benefits are coming to an end, of which, what are we seeing? Lower unemployment. We're seeing more jobs created, more people taking jobs, all right? That is a fact. That's a statistical component of the labor economy. Right now, we're seeing an acceleration in hiring, and that's because, you know what? There's benefits that are ending, all right? Continued claims, which is people that are on continuous unemployment, also dropped again to 2.88 million, which the prior week was 2.9. So we are seeing some meaningful declines in unemployment, which is a big deal. And we need to see more of that, okay? We need to see more of that. You know, a consumer confidence came out, which the University of Michigan runs this. We saw a meaningful drop here from last month to this month, and I really think that's a COVID. You know, we're seeing the Delta variant really start to spread. You've got parts of the country that really are low vaccination numbers, and I think it's showing. We're seeing numbers as high as 98% of the people that are being hospitalized right now are unvaccinated. So it's one of those things from a statistical standpoint, the vaccine, whether you love it or hate it or think it's fake, it's working. So you can think whatever you want. I tend to focus on the numbers instead of the garbage that floats around out there that so many of us latch onto. So that's one thing where I think you're seeing this kind of pause. And I think you've seen the market kind of pause and get choppy here the last week. And I think that is, and it could be directly contributed to with what's going on with Delta. Now, here, what have we learned since we've been in this pandemic? Anytime we have any big concern or we see volatility increase in the markets, we usually see a drawdown, which we have not seen yet. Those are opportunities to capitalize on. They are not times to panic. So remember that. In closing here, I've got a great quote here. Daniel Kahneman, and I probably butchered his name. So Daniel, if you're listening, which I know you're not, my apologies. My last name is Modelmog, and people butcher it all the time. So I really take great care in pronouncing people's last names correctly. So Daniel, if I blew it up, my apologies, buddy. But he says, courage is the willingness to take risk once you know the odds. Optimistic overconfidence means that you are taking the risk because you don't know the odds. There's a big difference. I talk a lot about focusing on the data and focusing on the truth. Those are the things that we have to focus on in order to make quality, sound decisions. That's in investing, that is in life. So, Daniel, bravo, my man. So, I'm going to say it one more time before I check out here. I'm checking out early today. Like I said, I'm a little wiped out and I don't want to fade and really look terrible. So, courage is the willingness to take the risk once you know the odds. Optimistic overconfidence means you are taking the risk because you don't know the odds. There is a big difference. And on that, this is Craig Modelmog for Friday, August 13th, Wall Street X's and O's. Have a fabulous weekend, and I am out.